All right, with major shifts in both federal policies and local tax rates, homeowners and buyers are paying close attention to what's next for the housing market. So joining us this week to talk about it all, we have CEO of Real Estate Connection, Brian Coester, back with us. Thank you for being here again.
Thanks for having me.
All right, so let's start with the big picture here. What are the key takeaways that the Federal Reserve, their decision to hold interest rates, what are those?
Yeah, so the Federal Reserve is in control of the monetary policy. So their job is to take the punch bowl away when the party gets too crazy and keep things going when the crowd's getting too stable. So right now, what they're trying to do is create an environment of stability. You have the Trump tariffs that are in place that are putting in some inflations and some markets like the steel market and some of the imports. And what they're trying to do is keep things going, right? You still have a bunch of sellers who are on the sidelines trying to figure out what their next move are. And overall, they're not trying to create any uncertainty in the future market. So I think it's a solid move. I think you're going to see some decreases as we get to the end of the year, but their goal is create some stability in these markets that are now moving a lot.
So how does this impact home buyers? So, you know, how do these new mortgage rates?
Ultimately, it controls the supply of money. So they're in a situation where interest rates are precedented set by the Federal Reserve. So it's going to keep things kind of on track, but they're trying to prevent any more inflation, really.
Okay, and let's talk about Montgomery County now, because they're going in the opposite direction. So they're actually raising property taxes. And what's driving this increase?
Yeah, so the property taxes control, government has interesting ways of collecting revenue and associated. So property taxes, when you think of property taxes, think of education and infrastructure, right? So Montgomery County has raised their tax rates with the idea of funding the largest education infrastructure project in history. So $250 million infrastructure project designed around building out the school systems, building out associated services, and they pay through taxes, real estate taxes, to fund all those programs. So if you think, you know, the best areas have the best schools because they're funded through the program. So you know, that kind of aligns with the idea of, because of some of the federal cuts expected with the Department of Education, that the counties and the states have to take a little more control, and they're ultimately going to do that through education funding, through taxes. So Montgomery County is actually operating at a surplus too, so they've been smart.
Okay, all right, so let's look ahead now. What should buyers and homeowners be watching out for this spring?
They should be looking to get a read on the market with some sense of it's in a standoff. So right now there's not a lot of homes that are for sale. Property values have peaked, right? Like DC's, you're starting to see cuts. Montgomery County, you're starting to see some cuts as far as they're not selling above list price, right? They're sitting on the market a little longer. So hopefully this sort of standoff where sellers don't want to sell, buyers are trying to wait and get a lower price, comes to an end with some stability. And then you're going to start seeing, I think, a little more normal market. The market's been off for the last couple of years.
Yeah, stability, norm, that's what we're looking for.
That's what we need now.
All right, well, Brian Coester, always coming in with the good information. Thank you so much for being here.
Thank you.